in the amount of $500.
All right, she purchased supplies. So what accounts are involved? Let's make the journal first. Go to the journal. What accounts are involved?
If we purchased it, we'll say cash is going to be affected. No.
It's on. I think it says on account, didn't it? We didn't pay with cash. I think if you look, it says on account.
On account. Right.
Does it? All right. So what's involved? What accounts? What are we buying?
Accounts pay expense. It's going to be an expense.
No.
It's supplies.
Supplies. Write down the word supplies.
Over here.
That's right. No, on the journal.
Supplies.
So guess what supplies is?
An expense.
Nope. It's an asset. It'll probably give us future benefit. If we have copy paper and toner for the copy machine, that'll probably benefit us in the future, which is the definition of an asset. When it gets used, it'll become an expense. That's what the subject was last night, Takesha, when you came over with those other guys. Was that they were getting to adjusting entries, which what happens is after the supplies get used, then it's an expense. But when we buy them, it's an asset, you see. All right, so supplies increasing or decreasing?
Increasing.
Debit or credit? Because it's an asset. It acts like all other assets. So we need a debit or credit. Huh?
Credit it.
Look at make a T account over there and write down supplies on top. And now it's increasing. Debit or credit? Nope. See the minus? That means decrease.
It's increasing.
It's increasing. We bought supplies. We have more supplies. Now we go to buy orange juice at the supermarket. We have more orange juice now. Put a little 4 next to that. Entry 4. And what's the other account, do you think?
Supplies.
On account. It's going to be called account payable.
Over here.
Well, make a new T account make another T account for account payable, since that was for another company. And put your plus in the correct spot. Okay. Is account payable increasing or decreasing? Do I owe more or less?
You owe less.
Before I went there, I never have been to the store before in my life. I owe more. Therefore, it's a credit. Okay. Entry 4. Now finish your journal up. Okay.
Should I put supplies in the account payable?
That's right.
Okay. And then
Well, step away from a second. The people in California can see this too. Now, is the you say account payable is increasing or decreasing?
accounts payable is increasing.
Debit or credit?
Credit.
So put it down in your journal. And supplies increasing or decreasing?
Increasing.
Debit or credit?
Credit.
Nope, look at the supply account.
Supplies debit.
That's on the debit. Debit means left. You got to get that in your mind. Okay, post it up. Debit means left. Credit means right. See, that's why you can't do this. And a lot of teachers, 4 weeks into a class, if the person doesn't know what a debit or a credit is, that's good. It's not, it doesn't bode well for the midterm exam. That's for sure. All right, but you are pick it up quick, and you have to be with Mike. That's what I was saying was that crazy mnemonic you had on the board. That'd be like, this way it'll teach you to understand like a language where debit and credits goes. Okay, next. Hopefully better than that. We're doing the same thing the mnemonic tried to teach. We're trying to teach it conceptually. Read it to us, young lady.
Collected cash from a customer on account.
Okay, what accounts are involved? How much cash we collected, it says.
So we collected $600.
What accounts involved?
Cash.
Increase or decrease?
We increased it.
Debit or credit?
Debit.
Do it. She posts first. That's okay. That's entry 5.
5. Let me put cash.
Okay. You're doing pretty good. You're doing all right. Huh?
No.
Oh, yes, you are. No, you are. You didn't know anything when you came in. You knew very little. Now you're doing fine. Okay. Post up. You're already doing where I'm satisfied you can pick this up quick. All right. The other account is what?
So we collected cash.
Why did we collect cash?
Received.
Why did we receive? Why did somebody pay us money?
It's a service provider.
No, because they owed us money. See account receivable? Doesn't it say the account receivable?
Because it's an asset.
Well, read it, honey. Read it again.
We were
Who did we
collected cash from a customer on account.
So a customer on account is called account receivable. It's your job. You work for a company, right?
Right.
And was this payday yesterday?
Yes.
Well, when you work on Monday, you won't get paid on Monday, will you?
No.
You'll have that's an account receivable then. So they're a customer on account. So what they're saying in English is somebody that owes us money is paying us. Is it increasing or decreasing?
It's decreasing.
Debit or credit?
Credit.
That's right. And no, go make your journal, fix your journal up. You're doing great, actually. Yes. Oh, yes.
Receive cash from owner.
Okay. All right. She posted up. Now we can see. Now we only owe we're owed only $1,200 now. Do you see that? Look at account receivable.
Right.
1,800 minus 600 is 1,200. You see that? Next, you didn't put account receivable on the journal entry. Finish that journal up. Look at the journal entry. Okay. Next. Good. Now see, now you got it. Okay. Next.
6 says we received cash of $2,000 from owner.
Okay. What happened was they took out of the business. You see the owner's equity account?
Right.
What we would do in this case is this. We'll make a little T account with an arrow, which means a parent-child relationship, and we have something called draw. Drawing. That's when we take out of the business. So, okay, first of all, is cash increasing or decreasing to the business?
To the business, it's increasing.
No, it isn't. The owner's taken out of the business, so cash is decreasing. To the business, cash is decreasing. He's taking out to go to Atlantic City.
Okay.
Okay, so how much is he taking out?
$2,000.
Debit or credit to cash, and how much?
Debit to cash.
Nope, cash is decreasing. See the minus side?
On the minus, right.
That's the credit side. So credit cash for how much?
$2,000.
All right, do it. See the minus side? That's going to subtract. Go ahead. That's right. Okay, what's the other account? It's going to be draw. Post to draw. I just tell you that. I don't want to plus or... See, when you hit debit, draw there, debit is left. Left. Squiarda. Left. Left. Left.
Right
In
here.
English. Left. That's correct. Left. So put in 2,000 there, and that's entry number 6. Put a 6 next to that. 2,000. So we always want to see... Okay, so... She's now going to make the journal. And when you debit draw, you decrease net worth, okay? At the end, what happens is there's temporary accounts, which are revenues, expenses, and drawing will go back into owner's equity at the end of the game. And that will decrease owner's equity, which makes sense because owner's equity means net worth. If you took $2,000 out of your business, the business will decrease in value by $2,000. Agreed? Okay, so now make your journal entry. Credit cash, 2,000. And debit owner's equity, and we don't care if credits come first. Your teacher will take a point off. Okay, all right, that's entry 6, and we're ready for our next entry.
So we have to put it that way.
Well, usually, just leave it like that. Leave it like that now. I like it like that, because a lot of teachers are obsessed with that, and they're really obsessed with it. Why? That the whole course, all you learn is that debits come first. Most teachers, when they teach, that's the most a student can learn. With most, you're Mike now though, praise God. But most teachers, the most you can learn is that debits come first.